Alrighty. So this Netflix chart, uh, I just started the recording, guys. This is just a little review, reflection. I want to talk about like how the market was in a distribution basically ever since filling the gap in the SPY gap at all-time highs and in the QQQ gap that was technically failing. It gave a little fake out above. However, the SPY gap was like just a really good confluence to be able to see everything. Whenever you're taking a look at this, it's like, okay, you have the all-time high gap. All the gaps are previously filled or they were all established and filled with lower highs off of, and then we got the footprint candle at lows, a lot of volume, and then that created a path of least resistance for the upside. Those absent sellers off of these bear gaps, these were breakaway gaps. It's almost like a parabolic short long setup or a parabolic short setup, but it's like a parabolic long setup, right? It's a very overextended premature distribution where you get this heavy, heavy, heavy capitulation, and it just ends up to be obviously deleveraging of one particular side because it's way too over leveraged, and then you get a lot of accumulation off of that fear, and then there's almost little to no sellers after that, and it's just a bunch of mess, right? So oftentimes what happens is whenever there's a lot of fear within the market, they accumulate that fear, and then what they do is they kind of just rewash, right? So this has intention behind it, given the volume. There's still a lot of volume behind this whole entire sell. It could be the preliminary phase in the first leg down of a distribution. However, whenever you get volume like this off of lows, off of previous bull gaps, you go over to like leaders like Nvidia, and it's like filling these gaps. It's like it's perfect for obviously relief, and then they redistribute it after they get a net gain off of accumulating it. Very, very, very simple things there, guys. So, um, I hope I'm not on my webcam. Like, okay, I'm not. All right. So, anyways, the short side focuses for me within tech, where okay, I figured the market's going to pull back over here on August 20th. I tweeted it. I said this is going to pull back, and what happened was we got three higher highs within this given day here, where it took out this previous lower high on like the daily, I guess you could call it, fill the gap, and then it started to fail the gap, and then it started to base within the gap, and there was really no buyer. A lot of people saw this as, oh, this is a little bull flag here. No, it's not. No, it is not. No, it is not. Do you really think someone that's buying down here is going to move their bid up this much percent? 8%? No, 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 they're not. This is more or less just a seller moving the ask down a little bit from what they accumulated from over here. They sell it back up here, and then the market redistributes over here, and then they accumulate it again. And that's just how it works, right? So, whenever we're looking at this, it's very, 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 very simple. It just takes a lot of patience. It just takes a lot of patience. It really does. I mean, there was nothing that looked bullish within this chart. Just nothing. Like literally, like I don't know what anybody saw here. I don't know why people were leaning bullish on this shit. What do you see that's bullish here? With a bull gap beneath us, with a bear gap above us that's filled, with SPY filling a bear gap, and then finally starting to see the progression simmer down. Little to no volume on the move higher, just a very fast, overextended type of correction back higher for potentially a lower high on the weekly and daily. What is so bullish about this? I don't understand what is. I probably looked like a mental head case whenever I was holding my shorts. I know I did. People were like, I had some people like, dude, what do you see within? I had so many people DMing me, what do you see within this chart, dude? I'm so lost. Everything looks so good. No, it does. No, it doesn't. No, it doesn't. Like these are bull gaps left behind. They're pushing them on top of the bull gaps, right into very shallow into them. They're finding no buyer off of them. They're sweeping out the highs, and then this was a nice little like market maker buy model on a base scale into the end of the week, and then it gaps down and pushes into the gap. No buyer off of the gap, like zero buyer off the gap. Like none. There was kind of a buyer as we filled it in after hours, and then we gapped our ways higher, but then it just started to reject. We just started getting these incremental lower highs, and then eventually what happens is we get the failure, and then we break through the initial test of the gap. Keep in mind, guys, the bulk of liquidity is not filled in after hours. It's just not possible. So this does not matter, right? Look at the volume here. Look at the volume in after hours compared to the volume of the trading day. This shit does not matter. I'm looking at just simple price action while the big boys are all playing. This gap, it needed filled, dude. It needed filled. We get to fill the gap. Okay, whenever you're looking at this, okay, that is progression lost from buyers. We get a daily print beneath the gap, and then we get these lower volume trading days trading at the bottom range of this candle. If you want to take a look at like lows to highs on this, take a look at equilibrium. I literally already described all of this. Perfect rejections, perfect lower highs intraday. I even said if you want to grab shorts here, set it live. Every single person saw it. Grab the 618, risk either this high or risk the 618 shooting star high. Risk 262.81, which is the gap level, and then take this thing back down into new lows, take it to fill the gaps beneath us, take it to retest the macro base levels, take it to retest everything that makes a lot more sense and it has a lot more importance behind it, right? Very, 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 very simple. I don't. It's if you don't find this simple, it is not the analysis, it is your emotion. Nothing I could really help you with there other than staying true to your analysis and kind of sticking with it if it continues to look like shit. Now we go over to some short side vehicles just in the equity world. What's the most valuable, good-looking chart? Well, I already caught the Apple top for 500%. I shorted it literally right up here, held it into this week on Tuesday, got a beautiful return on every runner that I had, and then we actually printed a hammer. We got a lower high on the daily for Apple by the look of this candle. And then from there, what happened was, okay, we got the lower high right off of equilibrium. That's our first lower high. And then we're trying to press this thing a little bit lower now. That is so simple. That is just so simple. It's just people get way too zoned in on a 5 minute. They look at this thing off the open and they're like, oh my gosh, a gap up in relative strength in the first 15 minutes, dude. Doesn't matter. Look at the 15, look at the hourly, look at the daily. It doesn't matter. Like that, the opening is challenging because of emotion, not because of analysis. This is the most basic chart of all time. This is the most basic chart of all time. These candles look like shit. This candle looks like shit. This candle looks like shit. This whole range looks like shit. Everything looks like shit. Shit, 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 shit. This looks like shit. SPY looks like shit. Tesla looks like shit. People somehow get like extremely bullish over here. Looks like shit. 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 Fucking shit. All right. So, everything looks like absolute literal shit. Everything looks like absolute shit. And dude, I don't know. By 2024 bull market, dude. It doesn't fucking matter. We're not talking about this over here. We're not like people don't understand what the whole premise, what the whole purpose of this leg lower is. They don't get it. Okay, so we go over to Netflix. This was a weekly buy climax happening into the previous swing high of 2021. This is a high. This is a very critical high. This led to a very violent distribution. Obviously, the preliminary distribution happened on this change of character in this fat base, followed by obviously probably a path of least resistance, and then the seller kind of backed off up until a little bit more of a rally, and then they got the fake out, and then this was a false breakout, and then it capitulated throughout the whole entire range. It capitulates right through this whole entire range. Why? Because this whole range was consolidated on for literally like what, a year? Like how many? Yeah, over a year, dude. Okay, so do you really think that there's a lot of liquidity that's left behind this range? Do you think someone's going to respect the fact that, oh, well, this was a nice consolidation, so I'm gonna buy this right here after a breakout failure? No, it's gonna break right through, it's gonna retest and be a miserable failure, right? So that was a very important range, right? We retested the very lows of the extreme and then got a rejection off of it. And then this is whenever we started our recorrection, right? We got a little shakeout beneath this previous support on like the weekly. And then that's whenever everything started to accumulate. We started to get higher lows, followed by a lot of ground covered from like these imbalance candles. And then that's whenever we recorrect our ways higher, right back into this high. Now, we're right back into the high. However, what is happening to higher highs into the high? Sold. Sold. Let's take a wild guess here, guys. What should this one be? If higher highs are getting sold, it should probably get sold. Yeah. But Netflix bull flag! Ah! PB investing! No. No, 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 no. Same similar type of scenario to um, financials, right? Like you get these like seller dominant PB's, he deserves to catch strays. I'm not saying it's him, but I seen a million relative strength on Netflix, bro. Tweets. They're dusted again. When will they ever learn, dude? Anyway, so we get this nasty first initial distribution looking sequence over here. Tech buybacks were announced within the market back in April, right? We get this really nice strong leg higher in the overall tech market. I don't expect anything to mark down substantially. And then we get the distribution once again. The volume starts to pour in for sell side, and then we start to get these like steeper corrections. And it was a really ugly looking correction. However, look at the earnings candle, doesn't look good. This doesn't look good. And then anything in between that was kind of just like weak looking structure. Keep in mind, guys, this is just one bigger campaign that's building into the previous swing high. It's as simple as that, guys. So, yeah, I mean, we get the recorrection within tech. This is kind of making its way higher, and then we start getting the heavier volume coming in off of what looks to be a failure over this high and a failure over the all-time high. That's not healthy looking. That's not good looking. That's not anything looking. What it's going to do is it's going to sit there. It's going to consolidate. It's going to catch a lot of people off guards. People, for some reason, love to trade names that are basing beneath a previous all-time high. It's probably the worst scenario in setup that in the history of trading, I should say. There is a reason why I was short Netflix on this given day. If you want to go back and take a look at August 22nd in the Discord, you can. I was short Netflix over here. It basically was above the earnings candle high, and then we started to look like a little bull flag. And then whenever I saw the all-time high failure, I'm like, okay, that's not a good looking setup, right? And here we are. So you go back over into like shit like Netflix, and it's just a little bit cleaner, right? Because we have a very clear cut risk to reward to deal with here. Like it's not anything that's like very hard to manage, right? You have the $701 2021 high. You have this external high up here, which is the new all-time high. And what this just looks like is like some sort of bull flag that's going to it's going to fail a previous day high, and then you're going to see the failure of the previous day high. It's going to suck back beneath the previous day high, and then start looking like it's in a capitulation type of environment, right? So if you're taking the initial sweep or the loss of this level, maybe down into here, risk the opening print if you want to keep the risk a little tighter, right? That was probably about my risk, like something like this on this day. Target was down here. I told you guys like literally like on this trading day I'm going for the 63 gap. Um yeah, I mean that was just a very beautiful target, an 8R trade. Absolutely just so nice, man. So nice. So nice, right? And then you're starting to look at QQQ getting the slippage beneath the gaps, basing underneath those gaps, and then it can't even claim into the progression of the gap, right? Like this is just lost progression followed by a retest into the equilibrium, and then it fails, and then it just looks like shit. And it's lower volume traded. If you go into the 15, what does this look like? It looks like absolutely nothing. We get our first attempt of a lower high, meaning internal structure that's kind of developing for this to find a lower high on higher time frames, and then it started to fail. Next following day, what happens is we sweep the previous day high, and then we fail in the 15 minute, and then we recorrect. Once we recorrect, it's violent looking, followed by a low volume rally into a lower high right off the bottom of the gap, right off the 618. Buy or short, not very hard. Not very hard. It's just I can't really explain these things in depth live because I have to focus on my own trading. You go over to see. Beautiful chart, dude. Beautiful, beautiful, beautiful. We have a risk level right off of here, off of like what looks to be like the gap closure. What happens as we close into the gap? What happens whenever we push right back into the gap? We get the higher highs starting to diminish, right? We get a 1% progression within 9 trading days or 11 days total of 65 cents. And then it starts to recorrect after that third higher high being created. It didn't fill the gap technically from the closing print of the day. Don't really care about that though, because the setup looks good. And then if it starts to obviously lose some ground, lose some steam within this given range, then I got to take advantage of it. I have to take advantage of it, right? So I need to look at the high. I need to look at the 62 to start finding lower highs off of. I go into the 15. I take a look at it. It doesn't look good. What looks so good about this, right? Like we get the initial high and then we take out those highs. We get the initial like breakout looking level on like the 15 or like the hourly, and then it closes above that on this day, and then the next following day it gaps down and bleeds and then starts holding the 62 spot for a higher for a lower high. That is shitty. You know how many people would be looking at this like, oh my gosh, bro, wedge break. Oh, oh my gosh, consolidation break. Durr. No. No, pal. No. Not happening. Try again. Anyway, very messy price action within this range, but then it starts to just give up the range. You get the sign of weakness on like smaller time frames. Like over here, you kind of get like the retest and then like the wick right off of. This was going to be the retest. It was into a close. And then we got the gap up, and then the gap up was sold, and then we got the lower highs. Like these little wicks over here, like they can't get you emotional. Like I talk about these a lot, guys. Like does this look good to you? Like does this look like healthy? Like if you're taking a look at like this from over here, like I don't, it's not, dude, my trading view, oh, I think I know what happened. Oh, fuck. I got rid of a card. I don't even know if I have, it won't let me go into replay mode anymore. Yeah. I canceled my card. That's what you guys know I was talking about trading view problems all week or all month. I didn't even know what it was. Totally forgot I got rid of a card. But anyways, back to the C trade. We have a gap down here for a target, right? So I was looking at losing 60 bucks for this to be a really, really, really nice trade. I actually still have a decent bit here. Look at this candle, man. So gross on the 15 minute. So filthy and nasty and gross. And then what happens is we just die right into the gap, right beneath the gap. And then I think what this thing can honestly do is, in my opinion, it's a stretch, guys. It's a stretch. I think this thing could go back down into like here. like mid 55, like mid 50s. If I could get that by September 20th, like I might not have to trade by the like I might not have to trade the rest of the year, to be honest. If this goes to 55 by September 20th, I don't have to trade for the rest of the year. But I'm not gonna let this really nice trade, this open P&L get away from me at this point. I'm up over 100% on September 20 puts. Um, so yeah, like I said, the confluence that I needed here, guys, go over to XLF. Really nice strong sector. However, the overextended looks are happening, and the chart looked like shit leading into the new all-time high, and then we got an absent side on the order book for like several trading weeks. So yeah, I mean, now we're looking to retest the highs. Let's give up the highs because you guys all know what I say about preliminary distribution levels or breakout levels that fail. If they get distributed above on, then we lose them. What do we look for a lower high off of? Oh, right here. Oh, uh-oh. Uh-oh. All-time highs. I'm just kidding, man. I just love bullying everyone that says all-time highs right before disgustingly steep correction. I swear everybody was saying all-time highs, like literally up here. So embarrassing. Anyway, I mean, I had some other trades, but they were very light. As soon as I popped 20%, I threw break-even stops on them. Because I was like, you know what? Wait, I don't even know. Why is my trading view? I don't understand why my trading view is giving me able to look at charts, but I don't know. That's weird. Yeah, I gotta hook up my new card to this. Anyway, my charts aren't delayed. I traded on them all week. Unless they just changed their service. Did they change? Did anybody? Did their service change? Like did they like make more tiers or something? And now they give people ads unless you have like a really good tier. Same service as usual. Okay, my card just declined then because I did get a new card. Anyways, there's a lot of charts and distributions, guys, as well. If you're just looking at the simple equity market, this is a distribution. I talked about there was someone long here. Sammy Sam was actually long on this, and I talked about how this is going to eventually find probably like a last point of supply, and that's why I said, don't get too down on yourself whenever you stop out on candles that look like this. Or, like this is a shitty looking chart, right? Like we're in a bull gap or a bear gap with a very, very distributive looking chart above us, and then from there, what happened was, okay, like we marked down, and then we started to get the mark up higher, right into the fill of the gap on the wick, lower high. All of these spots where this range is being lost and retested into can be an LPSY, last point of supply. And then you eventually get to sign a weakness beneath the range. Now you're bag holding your calls where it's like boom, boom, boom. Not saying that's going to happen, however, the chart just doesn't look very good. Maybe for an intraday trade it looks decent. However, when you're looking at this from like wider perspective of things, none of the charts look good. That's why I keep saying it, but I want to jam it into people's heads. That's why I've been short all week. I've held conviction into the few shorts that I really, really liked. I got the action that I love to see within C. In confluence to the financial leaders. Like I said, you go over to the financial sector itself and you take a look at these, and they're overextended, right? With with distributive looking ranges beneath us, and then it looks like a seller all of a sudden got absent as we made a new all-time high. That's not a healthy looking thing. It's not healthy. And then the rest of them look like shit. Look at all these charts, guys. Remember I talked about preliminary distribution levels, levels that fail. What happens whenever you retest them? You get the lower high off of them. That's what the head and shoulders model basically is. I don't really like the head and shoulders patterns, nothing like that, but they do work whenever the charts look really bad. This chart looks really bad. This chart already had a distribution kind of play out. That chart looks like shit now. This chart's been looking like shit. Um, yeah, horrible looking charts, man. Horrible. Absolutely just disgusting looking. Every single chart in this sector looks like shit. Like GS, horrible. This one looks real bad. Like, oh my gosh, look at this high that was taken. Look at this bear gap that was failing all the way from back here. Look at that. That is so ugly. Ugly as fuck. Gross. Stinky. And then you just fill the imbalance candles from imbalance to imbalance, right? This is a very large spread candle. You have to fill it. You have to test into it. Go into your hourly. Ugh. So filthy. Yeah, that hurts my head looking at these. I can't believe people were bullish this week. I honestly, it's a disgrace to trading. It's really a disgrace to trading. It's a disgrace to Wyckoff in technical analysis if you're bullish on this shit. I mean, there's charts to be bullish on, and like if those fail, that's one thing, but like if you're bullish on the general market, like you have a little bit of a mental problem. So, yeah. I like to keep it real. I'm not being an asshole, like I said. I want to keep it real with people. Anyways, those were the trades. I mean, there's really not much to talk about. I could sit here and talk about the same trade over and over and over again. I mean, it was really nice, and there was really nothing else that I could trade. Like I said, I already explained the Apple trade. Um, really nice trade. QQQ short, already explained that. I basically had four trades that paid for the whole week. For the honestly, for almost like probably a month. Like I'm probably gonna make a month's worth of gains off of those trades. So very nice. It could have went bad though. It definitely could have went bad. Um, Sames. Why does PLTR catch your eye? It doesn't. PLTR will not be a focus of mine. Oh, it's on my watch list because I was checking it in after hours. If you guys didn't know, look at PLTR in after hours. I think it was added to the S&P. That and Dell, I believe. Yeah, Dell. Yeah, Dell. They both popped 7%, like 5 or 7%. And this chart was actually looking bad, so that's decent. However, I honestly, it's probably gonna be a short. Uh, I mean, this has already been a short for so long. PLTR, what about it? I mean, yeah, this was kind of just like a guessing trade almost. Basically a guessing trade. Uh, do I think this trade was good? Not really. Look at where you're at. Does it look bad? No. Does it look great? Does it look like it has a lot of really nice risk to reward off of it? No. I mean, who knows what would have happened if it never played out, like with getting added to the S&P. People just, there was so much sentiment around and talking around like what was going to be added to the S&P. You kind of want to just avoid that, guys. Like it's a like they're guess trading, and then like they're buying puts on names that could be removed, like WBA or something. I don't know, dude. I don't know. It hurts my head to even talk about. FinTwit's getting real bad, man. I just took a scroll last night. It's getting super bad. Yeah, I don't even know what I'm gonna trade this week, to be honest. I mean, we could take a look at some stuff. Dude, these ads are getting really annoying. I gotta grab my wallet. GME, scam options, don't care. ZM was one that Django mentioned to me, and it was a good looking chart. Um, it's just funny how long the accumulation's taking. Let's swing low here. Such a long support established off of it, and then they took it for two more lower lows beneath the support. And then here comes the major catalyst, right? I mean, this is the heaviest volume that we've ever seen within Zoom ever since all the way back here in 2022. So notable. I'm trading this. I already knew this one was really clean, but I didn't realize that it developed this clean of a pullback. So thank you, Django. I knew that this report, I had my eyes on the report, but it kind of got that breakaway look on the three following trading days, so I can't take an entry there. And I still like Roku. I lost on it, but I still like it. Just because I lose on something doesn't mean I'm not going to retrade it, you know? Roku was just kind of a very weird looking. It's not ready yet. It's definitely not ready yet. I'll be waiting for probably a weekly print, like a nice strong clean weekly print. Like what we should have probably done here was take low to high, start looking for not even a discounted entry because that's just ruining the purpose of a sign of strength. Um, just looking for a very strong, clear sign of strength, right? Like if this were to go red to green, but on ripping on crazy volume and then closing green above the previous candles and range, like closing is a green hammer that's like all the way up here, it's a little bit different. Um, but this is kind of just, it's not even the fact that I was that wrong because my entry was here. It was just the fact that it's a volatile growth name. You need direction or you're gonna lose, you know? Like all it really did was it caught my eye here. I took an entry and then it kind of consolidated and bled a little bit beneath, only 1.72% beneath on Roku, volatile name. That's nothing, right? And then it bled 4% lower, and then it got the markup 7% higher. Yeah, so technically my calls would have been green right over here, but you have to be very precise if you're going for home run hits like that. I was definitely going for some sort of like bigger trade for a target into 72. Probably would have been a few 100%. I lost 30%, so like, do I really care? No. Um, don't care at all. Risk to reward was in check. I would have won way more than what the loss was. So that's kind of the mindset that you guys need to get into. Um, some of you guys do have it, but a lot of you guys don't value risk to reward yet, and it needs to happen. Um, Yeah, I don't know what I'm trading to be honest. A lot of these charts look really bad. Like Apple puts is probably still the best risk to reward. I still have some. I still have some Apple puts. I still have some Q puts. Most of these are like slight runners. C puts. I still have a one full position on C. I had two positions. Shorter expiration, September 20th shorts. Those are up like 120% or something. And then I also have Netflix runners. So I have four open short side trades. I do think the market could get a gap up on Monday. Let's go take a look at like the economic calendar real quick. Um, Economic calendar might bring data that can definitely be distributed into again for like another lower high. I don't know if the lower highs being put in right now are necessarily strong enough. I don't know if I don't know yet. We have CPI next week, Wednesday. Um, I would probably say that there's just going to be a big crush there on premium, and then initial jobless claims is probably going to be the one that accumulates slash distributes the market, in my opinion, just because CPI has so much eyes on it and just so much. Yeah, this week's gonna be a little challenging, but not really. Not really. I mean, I just kind of want to. It's been the same. It's not like week by week. Oh, is this week more challenging than this week? And is this week more challenging than that week? No, it's just August, dude. It's just August. Like it's just been the market has been in the same general way that you need to approach it for a very long time. Like I'm looking to average probably 4 or 5 trades a week. Ever dating back all the way whenever I was trading like McDonald's and Nike for absurd wins, like I still wasn't trading a lot for the people that weren't in here. Like really I was it was basically like this week. Like I was slamming the table on like the C short, the Netflix short, the Apple, the QQ. Same thing with like McDonald's, Nike, Starbucks, shit like that. Like I was just like all over those names until they paid, and then I just like didn't trade. And then like that's just been what the market is, man. Oh, and then I also did have like Nvidia shorts around that time too. Like I was destroying Nvidia, like every single way possible. But we don't have that luxury right now, guys. We don't. We really don't. There ain't much more I could do other than top tick Apple and basically Qs and then slam the table on some other sectors that got absolutely drilled to end off the week, right? Like nothing you could do. So with that being said, we have some really nice clean looking growth charts. Is this correction steep enough for the market to be able to go risk on? I don't know. That's what really kind of worries me. Um, but you could still get that one outlier growth name that provides almost like a negative beta run. I don't know. We'll see. But I'm gonna hop off. I'll see you guys.